All right, let's talk about downtrends. In this lesson, we'll define a downtrend and explain key components. A downtrend is simply a mirror image of the uptrend. In a downtrend, prices are consistently moving to lower prices because supply exceeds demand. Downtrends reflect that an imbalance exists and sellers exceed the buyers. When the buyers go to zero at any given price point, it allows sellers free movement, giving way to the market moving to lower prices. In a downtrend, the sellers are in control. So in that case, the emphasis of the trend is on the highs. This is illustrated with lower highs and lower lows on a price chart. During a downtrend, we should see strong impulse moves on the down segments with small corrections moving up or sideways, which include mixed colored candles. In a downtrend, we look to sell short at qualified supply zones. Now let's look into when a downtrend actually begins. A downtrend starts with a high, a low point follows, then an equal or lower high, and then the market begins to move down. As soon as a breakout occurs below the previous low, creating a lower low, that's the moment a downtrend is official. The downtrend is created as soon as the price crosses below the low, and at that point, the focus is on selling short. Now notice, just as with an uptrend, there are three segments. Recall that any trend consists of three segments. In the case of a downtrend, it consists of a down segment, followed by an up segment that does not cross above the preceding high, followed by a down segment that drops below the low of the preceding up segment. Now let's define the swing in control and the breakout segment of the downtrend. Downtrends occur because institutions are selling and a large flow of money is to the downside. As price trends down, the highs become equal or lower, showing that the sellers are controlling a certain price level and moving the markets to lower prices. Therefore, the highs of the trend control the trend. The controlling swing high of a downtrend is not the highest high in the trend, but rather it is the lower high that is the controlling swing high. Looking at the controlling swing chart that we have here in front of us, we see we have a high, a lower high, and then price crosses below the low. At this point, once the market breaks out to the downside below the lower high becomes the controlling swing high of the downtrend. Now ask yourself, why is that important? As we learned with uptrends, we have a continuation and discontinuation of any trend that hinges on the swing point or pivot in control. If price, in this case, ever goes above that lower high, then the trend would be discontinued. It basically serves as a line in the sand, so to speak. And we'll learn about when a downtrend terminates in the coming lessons. For now, keep in mind that the controlling swing high of the downtrend is a very significant point. A downtrend may have multiple swing highs, so it's important to know which swing high is the swing in control. The controlling swing high is the highest swing high that is located between the breakout segment and the swing low that was crossed, which created the breakout segment. The breakout segment is the segment that begins from the lower high and breaks out below the preceding low. It's the impulsion phase connected to the controlling swing high. It is the entire down segment starting from the controlling swing high to the following swing low. Identifying the breakout segment of the trend will be important in determining where we want to find supply zones so that we can sell short with the trend. So in summary, though a downtrend always begins with a high, It is not official until price makes a lower or equal high, and then a breakout occurs below the previous low. I hope that makes sense. For a confirmed downtrend, we have now defined the key components, the controlling swing high and the breakout segment. When we combine this with supply and demand zones, these key components will play into our strategic decision of where we want to join a downtrending market. Before you move on, review and memorize the terminology associated with a downtrend. Go to any chart in your preferred trading platform and identify when a downtrend begins. Using the same example on your chart, identify the controlling swing high of your downtrend and identify the breakout segment of your downtrend. Hope to see you in the next video.